Good morning, everybody. Hope you all had a good weekend. And I hope you have a wonderful start to this second week in September. Apologies for starting a little late this morning. 11:45 time, Riga, Latvia time. 10:45 Central Europe, 9:45 London. I was working really hard to code up a new chart, a really good, I think, macro chart. Shows exactly where Bitcoin fits into the global financial picture. Couldn't get it done before today's stream, so you're going to have to wait one more day, but no worries. It's coming. I think it's really, really good. I'm going to put on my screen now. There you go. This is my old charting engine. Here's a clip of my website. See here, assets, liabilities, equity. Assets, liabilities, equity. This I'll come back to a lot, but just always remember that when we talk about wealth or value, usually that's an asset, but that will always match equally the value of your debt and your equity. So if you hold a stock, it is certainly an asset for you, and you have no debt matching it. So then you have a stock market share, would be like the asset side of your personal balance sheet. Then you would have stock market equity, would be the equity side of your personal balance sheet. So these things always match, and I'll come back to this tomorrow, but it's not true to say that, you know, if you wanted to count up all the real estate in the world and then you counted all the loans that were against that real estate in the world, you wouldn't just double count it to count wealth. Okay, so like if I had a house and it was worth $100,000 or whatever, $500,000, I don't, by the way, but if I did, say it was worth $500,000 and I had a loan in the bank also worth exactly $500,000, that would be debt on my personal balance sheet of $500,000, and then the house itself, the asset value, $500,000. You don't add them together and get $1 million. So I'm going to come back to that idea tomorrow. It's really important, I think, especially when we talk about Bitcoin and collateralizing Bitcoin and loans against Bitcoin. The asset side of Bitcoin is very easily counted up. All right, we just take all the Bitcoins outstanding worldwide, multiply it by the price. We get a market capitalization of Bitcoin, as it's called. But that is both the, or I shouldn't say both, that is naturally an asset because Bitcoin is asset first money. Anyway, I don't want to go too much into this because I'm going to come back tomorrow on this. Good morning, Ansi. I was thinking about the discussion we had about global wealth. Come back to it tomorrow when I finally get the chart coded up. But back to our favorite one. All right, I know people are freaking out, thinking the price action of Bitcoin is too soft. Okay, zoom right in. I'm pulling in up $111,000 Bitcoin right now. All right, my power curve is 113K at the moment. And as you see, it goes up about $100 a day. At the moment, $107,000 a day. See that? 112,923 yesterday, 113,30 today. All right, so about $100 a day will change the power curve. And even though price, you know, madness of crowds can, back in August, mid-August, when I was finish up my Euro tour, Euro conference tour, was 10, 12, 13K over the power curve. Now we're just under the power curve. All right. We're remarkably on trend. So it just remains my message during all the fear, greed, FOMO, to focus on this curve as, you know, you can call it fair value. A lot of people like to say it's fair value for Bitcoin. I'm not going to necessarily disagree with that if that's what you want to describe it as. Of course, we have this meme, one Bitcoin is one Bitcoin. And I don't want to lecture too much, guys. So if you want to see a chart, let me know. But I'm going to go back to my evolution chart. Whoops. 1 second. So it is true. One Bitcoin is one Bitcoin, right? But, you know, imagine the despair, especially for someone that might have come in here when Bitcoin was over $1,000. And then it was trading only $230 back in the depths of the crypto winter, which lasted a full, I mean, the worst of it lasted a full year, right? So it's basically, if I recall, like January 2015, it hit lows of, you know, right there I caught 199. But then if you go all the way out to January 2016, if I recall, it's still, oh no, it is back up. This basically lasted a year of like complete sideways in the low 200s. Here we are again, say 9 months. Like utter despair. And yes, one Bitcoin was one Bitcoin at this time. So having that in mind, if you look at this chart, which I've been sort of touting in the last week, you know, once Bitcoin found its base, once this power trend sort of settled down, and by settled down, I mean the dotted line, the dotted black line starts to really look like the solid black line, right? And you can see that happens from about the end of December 2016. But then you start looking at what the power curve was projecting at the time, and it's pretty amazing prices, right? With Bitcoin only being under $1,000 a coin in 2016, we were projecting $118,000 price today, September 8th, 2025. And that would get pulled up here as we saw some euphoria from 2017, projected $140,000 in January 2018 today, September 8th, 2025. Then comes back down as we go into another bear, 125 here. By August 2020, Bitcoin was projecting $125,000 today. Good evening, Tim. This is something that, again, I think would just should settle a lot of nerves when you want to talk about what Bitcoin can do to project. Hello, Siradon. I'm reading your comment. Let's go back to this chart. And yes, correct. It's not the power curve itself is, it's kind of like a mean. There's a lot of means in the calculation, standard deviations. Sum of least squares, basically. So it's not a 50-50 thing. It's just wherever it's the price is most common is where this curve, the black line, will be. It's actually not even exactly that. I think most common is the mode, which will be slightly different. But anyway, the point is you need to find a base number first. All right, so the base number is here. This is power trend, 96R squared. We can draw a lot of different trends, averages, whatever, but here we have a nice smooth trend. And then the question would be, okay, well, how often is the price, say, here, when the price is $19,250, and this was actually this was the high day, December 16th, 2017. I think intraday this traded over 20,000, but this is what the number I have in the model. This is something like 6.5 to 7 times the power curve all time. But I'm slightly more complicated than that because the power curve was not this line at the time. And I need to have the evolving. It was more like, let's go back here, here, here. Let's find December 2017. There it was. It was very close, but you see that it's actually the math that I'm working on is the evolution. So it's 3,400. See that? 3,400. If we go back to this chart, this is now daily, so it's even different still, but power curve at this time says 3,087. It's actually, the curve was 3,400 at the time in December 2017. So anyway, take that, you run the math, and you see, okay, we can get a range of multiples. All right, and other people do this different ways. Plan C and Cena, they've done this quantile regression, which will just give you exact percentages and give you a very smooth curve all the way forward, all the way back. But I like the multiple. So again, just taking the 10th and the 90th percentile here. Going back to the top day in December 2017. The 90th percentile, you see there it's 2x, right? So it's 2x the power curve at the time. And by the way, you can figure out what the evolving is if you divide by 2. So again, I know there's a lot of different numbers to play with here, but take 6,518, divide that by 2. That's going to be 3,250. That's the actual power curve at the time, mid-December 2016. At that point, in December 2017, 90% of the time of all observations, Bitcoin was below a multiple of 2x the power curve. So that's what the number 9 is. And the number 1, the 10th percentile, means only 10% of the time was it below the 0.3x the power curve. So then once you run that math and you apply it over time, you get these bands. And again, the reason that my bands are jaggedy and not smooth here is because I want to keep the multiple fixed. So I got 2x here always. You see the number 9 is always 2x, number 10 is always 0.3x. And that's so whatever the curve is at the time. And then again, you can see clearly the beautiful thing about this curve is it looks pretty awesome from about 2016 on. It moves very smoothly into what we project into the future, which is just math as well. So yeah, you have to just sort of run it, but the all-time curve, which is here, which is the same curve that we project out into the future and the multiples and everything, it's something around 65% of the time. So 65% of the time, all time, the Bitcoin price is under this black line. All right, so I guess 6 and 7 here. You can see it straddles the black line. So there's a 60th percentile is number 6, 70th percentile is number 7. Power curve is in between, closer to the 6. So it's probably actually like 63 or something. I don't know the exact number as of late, but just roughly say 2/3 of the time. And that's what we can conclude statistically. Good morning, Logie. Is it Logi? Logi? So anyway, that's sort of the math. Let me actually just do a Gemini for... So here you go. Here's a Gemini. I know Gemini can be like quite wrong more than GPT, but the black line you see is ordinary least squares regression, and you can do linear, exponential, logarithmic. This is power, and then mode. Sometimes I say mode. They're not the same thing. So OLS is the best fit trend line. They're saying linear, but again, you can use linear, logarithmic, power, exponential. And mode is the most frequently occurring value. Yeah. So by that definition, probably mode is going to be lower because this is always moving up, right? And unless you adjust for it, you'd have to standardize it. You could find the mode of the multiple would be probably different than this. Anyway, I don't want to get too deep in the statistics. I'm an applied statistics guy anyway, so you can do them both. I can probably get a chart up where we see mode versus ordinary least squares, OLS, which is what the black line is. The point is the price is 60, 2/3 of the time, the price is under this black line. That's what it's really saying. And actually, to be very specific, it's not exactly the black line. If we look back in time, it's under something like these middle lines. All right, see that? These orange 6 and 7, basically. Because that's kind of how the thing evolves. I don't know if I'm fully answering your question, but that's what it is. So the point is, yeah, as we move into a bull, we are in rarer territory, you know, and you can see, like here, you know, bulls come and go pretty quickly in Bitcoin. And by the way, they do the same in stocks. Like, you don't always just run to a high level and then stay there. Usually you FOMO in, Wall Street cashes out, dumps on Main Street, and then rinse and repeat. So you got to be very careful in stock markets, obviously. But with Bitcoin, Wall Street didn't even know about this for years. Now they're finally getting involved. Let me take off the 10th and the 90th so you can see exactly. This is really how the regression looked over time, right? It's not this. This is all time, but this is over time. So you can see, you go through years where we were just completely under the power curve, right? From 2014 to 2017, spring, now summer 2014 to almost summer 2017. Nearly 3 years, just doldrums. And I remember when people got really excited when it got back above $400. Somewhere here, end of 2015. Anyway, on we go. And so the fact that we're sort of staying here around the level which is the best fit of the trend doesn't really bother me. I mean, it's just we're right on trend. When we start to get above this 9, then I think you need to be careful, cautious. Maybe, again, never financial advice, but maybe you could think about lightening up for lifestyle or or whatever. But let's just use, again, 2017 as a good example. So when we rolled up, this was a very pure top we had in 2017, right? We don't know if we're going to have it again, but we rolled up to a 20K in December, on December 16th, 2017, midday. We got above 5K. I also remember this time very well. I was with Fernando, my old co-host in New York. We were doing some interviews. I remember we got above 5K really quick and then kept going. That happened in October 2017. When did we get back below again to 5K? Not until, consistently not until, look at this. Bounced up again, here. November 2018. So that's a year. That's actually a year where we fell below a number which was the 90th percentile a year before. Right? But as we keep posting higher highs, we pull that 90th percentile up. So that's a really good thing to think about. Like, this could give a lot of people Maalox, heartburn moments. You know, if you say, okay, I'm going to lighten up over 90 percentile, and then it keeps going up for a while and then has a big fall. You know, if your plan was to sell, buy high, sell low. Sorry, sell. That's a good retail method. Sell high, buy low, and buy more Bitcoin than you sold for. You know, it's difficult. And I'll always be the first to admit, selling Bitcoin is one of the hardest things to do. Letting go of those hard-earned sats. So, you know, if you tried this strategy and you sold a little bit early here, like at the 90th percentile, obviously you'd miss the top, and then you have to wait all the way for a year for it to get back below 5K. And then it did. You know, it did indeed get back. We fell down to 3K, right? And then on we went. So it's just like anything. I think you really need to be careful if you want to play this strategy of lightening up on the tops. And it's also why I think it's better to look at the top 90th and even the days above it. All right, so this is days above the 90th. These mountains. You see there in the tooltip, 80, 84 days. Then it reset here a little bit because we dropped out, but then it, again, 30 days. So the point is 3 to 4 months, we're above the 90th. If you counted every little blip above, you know, it could be like 6 months. This is never going to happen again. Pretty sure of it. 7.8x the trend at the time. And if past this prologue, this won't happen again unless a really rare event, this one, nor this one. So as I've said many times, I think this is what we're looking at. Yep. Not really. I'm not a home miner, to be honest. I just prefer to buy sats. You know, this complication always. You got to work on the cost of electricity, the compute. Not the right person to ask. But I do look at it, and I think it's genius how Satoshi did the whole thing. I mean, it is like mining for gold or mining for some other metal. There's a big upfront cost. It seems Bitcoin is still different, though, in that Bitcoin miners generally will hold the coins. especially with these booms that we've had. You know, they hodl for the boom. And I think they're not even, I mean, I think a lot of Bitcoin miners, which also is a competitive, shows you how competitive it is. A lot of Bitcoin miners lever up a lot of their costs, like with lines of credit. If they have some Bitcoin that they can collateralize, you know, they're not going to always and every day send the exact dollar amount of the Bitcoin they just earned from a block yesterday to pay the electricity bill the next day. It's more efficient for them to take a line of credit, pay the interest, and use that for operating costs. Now, of course, that's a lot of risk. You know, if you don't get enough Bitcoin or Bitcoin price crashes, there's risk there, but that's what they're doing. It's my understanding. So it's super competitive. It's a super competitive business to mine Bitcoin. That's my thoughts there. But again, this is a really solid chart, because if you look at now the 2030 projection, how that evolved, you know, we were as low as $520,000 prediction in 2030 and as high as $860,000 projection. But as we've moved on towards the present and the power curve gets more and more statistically relevant, mid 500s. And now I'll show you this on linear, right? So you can see how volatile when you make longer projections, the more volatile it is. Okay, so again, you get all the way up to, even though today's projection back in 2018 was only, quote, only 162K, which is still hot based at the time, 2030 projection gets all the way up to 850, all the way up to 790 here in 2022 because of that bull, and then down, down, down. This to me seems like again, I don't know how to say it probabilistically, but this seems like a pretty good bet for the end of the decade because it's been here for a long time. And also, if we go back here, when we overshot like the really, really rich days of calculating and projecting Bitcoin's value, and then we overshot to the downside, the worst level we had was right here. I mean, yeah, right here for 2030. Show you exactly for 2030. 520K. That's if you look at the whole curve over time, all the data, you know, looking at the data when you have it, not extrapolating, just looking at the data when you have it, right? And then how that evolves. So basically, I think what you can say statistically is the trend projects that the 2030 price for Bitcoin can be as low as 520K or as high as 860. But then you just have to look as this thing evolves over time. Of course, I could do percentiles on this and everything. It just take a lot of more data. But as this thing evolves over time, we trend towards the mid 550s. So I think it's a pretty sound metric if you want to plan 5 years ahead. I have the today's metric again here. So you can go on my website. You got the curves. Here's the today's at the time. Okay, so the really rich early years when Bitcoin was finding its footing, too high of trends, we're off those trends. But things start to make sense from about 2016, as you see, right there. And this updates every day. You know, here's for comparison, average price during the year as the year moves on. So for the first time, we're averaging above 100K already. And there's no reason for me to think that we're not going to average over 100K this year. Trend line at year end, 125K. Trend line now, 113. How do you discount FTX, Luna, Celsius type events in your graphs? Not really accounting for them. I mean, you only account for extremes. So the extremes are accounted for. Let's go back to here. The 10th and the 90th. Take off this. Let's look at the all-time. So again, this doesn't tell you time. This is why I'm perfectly honest with people. Like, it's just kind of a caveman looking at the 4-year cycle for me, because it's happened before. Why couldn't it happen again? I know everybody's saying it's not going to happen this time. They might be right, but why would you bet against it? Is my point. So anyway, we know that we have 4-year pumps. This is the 4th year coming up at the end of this year. And then we have the year after, like major dumps. You know, it took a full year even and a half. Well, again, this year was just super low, all of 2015, which is more than a full year after the prior top. 2017 puked harder, got a lot of the stuff done in early 2019 before pumping back up. Right? And then we tested that again just right there during crazy season a year later. And then for 2020, the 2022 crash, here's your FTX Luna. Everything was here, right? I think this was FTX right there. Caused this puke. November 2022, 15. Or was it here? I can't remember anymore. No, it was here. It was like here. This was the FTX revelation. You know, if you think about it, that only lasted 2 months. And we popped out. Peter Zion with his brilliant proclamation right here. So it doesn't account for the time. It just doesn't. You know, I'm making that observation caveman style. I'm not doing anything fancy. We know it's 4 years. We know that halvings are 4 years. We know the cycles tend to be 4 years. Can that change? Absolutely. I'm not saying they won't change. But I am saying, you know, we have pretty good data on it tends to be 4 years, and we see where, you know, the extremes. And so again, back to the 2022 example, your FTX Luna Celsius, we did not quite hit the 10 percentile low. It's more like 15 or 12. I don't know. I don't know what it was. Here's 20th. So we did hit that. Let's go back in time. Also hit the 20th on the downside here. And here, briefly. And then back to the old school days. This was a long and painful one, like a whole year. Whole year. Below the 20th. So that's what the model tells you. It tells you the extremes, and that's it. Does not tell you how long a bottom will be or how quick a top will be. And I think those are the right adjectives, right? Because everybody knows that the bottoms last longer than the tops. And that's like a broad market thing. Like, I'm not making any, you know, important proclamation there. Everybody knows that. Let me pull up something like Nvidia on TradingView. The point is, yeah, I mean, Bitcoin, I think, is safe to say, like most markets, if you have a blow off top, it blows off. It just doesn't go to 20,000 and then stay there. You gotta flush out the weak hands. No problem. Hope it answered the question. Let me pull up Nvidia. Nvidia is one of these stocks that has been around for a long time, but with just the intense um, AI revolution, it's just gone crazy in the last 2 years. I should do some percentiles on Nvidia as a percentage, because if we think, like, I don't even want to get into the full chart, but here's just very basic on TradingView. Like I would say this was before the AI quote revolution, right? So it was 2021, $32, fell down to 1350. And then ChatGPT comes along right here. People understand that the chips are important, and it's just like it leaps into the world's most profitable, most valuable company. My point is, some people think Bitcoin could do it like this. Again, anything is possible. But if we look at Nvidia here over the last 2.5 years, sort of hasn't looked back. I'm wondering when it's going to look back. But it's just again and again and again, all-time highs. Had a little bit of a down draw here, November to March, which is a long time. 6 months it went down 30%. Again, I'm not a technical trader. I don't care. I don't prefer to sort of live my life that way. But this is up, what? Since the start of 2023, we're getting close to 10x. Right? So people think Bitcoin is going to do that and stay up. I have my doubts. Precisely because of these percentiles. I mean, it's already growing at a crazy pace. %42 a year at the moment. I'm pretty convinced there'll be another boom and bust in short order. It could be, it could play out very difficult, like a double top here. It could play out over an extended period. Like we don't get it until, say, spring of next year. It could play out like a pure blow off like we had in 2017. No single person on this earth knows the answer to that question. And I'm using no, I think technicals is, again, I guess it's good for some people if you stay in front of a screen all day trading, but to me, that's the number that's kind of voodoo. Not the number, but the strategy, because it's just a lot of lines on charts that isn't based on math. This is actually based on math. And statistics are, a powerful thing. We have 6,000 days worth of data that shows Bitcoin has the best fit around this trend line. And by the way, as I was talking about predictions and how you can go back to 2016, it predicts 2025 September 8th really well. Let's go back to our other metric comparison. Yes, Tim. Great point. I mean, this is, again, if you want to just hodl through this and forget my analysis completely, or just, hold on to the bits about what we're talking about here, then that's totally good too, right? Holding on to, so there's your curve, right? End of 2030, 550, 560K. It's a great return. I mean, it's an amazing return. You can imagine, I understand this sentiment too, where a lot of hardcore Bitcoiners are saying just hodl, never lighten up, never sell. Stick with your fiat job. Buy sats only. Totally good strategy. It's just this chart focuses a little bit on these extremes. But like I said, it's not easy because, again, let's analyze 2017. And then I want to show you another chart, but not 2017, sorry, the 2021 boom. So this was our double top time, right? So take off the percentage. We had sort of equal, but all the other metrics actually pointed to this being the top. And you see how the price is well above the number 9 for more of its sort of cycle here, right? Goes above here in January 2021, falls back down in May. Now again, we go back up again in November, but it's very, very brief, and it's sort of like really hits resistance. The PSR chart, by the way, where this is the market cap divided by the miner revenue, that also tops out here, specifically here. So this was probably the real top. It was the first top. It's like when all the buying from all new entrants really exhausted. Like you bought, and then there were no more buyers. We had this sort of dead cat bounce of buyers, which really wasn't a dead cat. I mean, it got all the way to the same level, 60K, and then we went back down. But again, if you want to play, like, not do what Tim says, which is just hold, which is a great strategy. But if you say you even sold here at, I don't know, 55, you'd be happy with yourself here. You might be second guessing yourself here. Then you'd have to wait all the way to, or is it? Well, December, to be sure that you sort of made the right move. And by the way, when I'm saying sell, again, never financial advice, but I'm not saying your whole stack at all. I'm talking about, personally, I'm talking about small percentages. So you got a year's worth of nail biting if you engage in that strategy. And another thing is, I think most people should be pretty clear that when you get to these levels on the downside, like this is, in my opinion, just, if you got the capital, that's when you should be excited to keep buying. And you would have to wait a full another year, right? All through the 2022 madness to finally puke out these levels here. So I'm not trying to sell a strategy or anything. I'm just trying to show you how I'm looking at it. And this is a good point. It's a 37% CAGR until, I can show you exactly what the CAGR is, by the way. Let me come back to that, Tim. But here is another point. Back to the price models. Okay, so log scale. Stock to flow always was wrong in the earlier periods, and then right when he started to develop it, which was somewhere like here, it was too aggressive. All right, so if you look at where those coefficients were today, they're way wrong. Okay, 2019 model 770K, 2020 model 6 million by today. But then if you take off these, because remember, he's using gold and silver and platinum, palladium, all these weird things that should not be used, because, and I'll come back to this as well in the future with more You're using exponential coefficients for a power graph. It doesn't make sense. That's what stock to flow is. If you use stock to flow in a more sound basis, which is ongoing all the time, it looks better. Right? Again, this is a power trend. So as Bitcoin stock to flow, remember, it takes a year after the halving to get to the next stock to flow, right? Because this is an annual number, and it's a running slowly annual number. So you get the stair step. Looks okay, right? And by the way, I think it's totally possible we could jump up to hit, you know, this number in 2026. But again, your model shouldn't predict the extremes. It should predict, you know, straight through it in a scale invariant way. And then we can run percentiles like I was doing in the other model. So, you know, we'll see how that works. But again, how did stock to flow predict Bitcoin's price from the past if we stopped it, right? So again, I've shown this lots of times. If we stopped it in 2016 and just kept predicting, here's what we get. All right, it gets further and further away. So now the best way to do stock to flow predicts 350K right now. The old 2016 model is 580K. And this will continue to spread out, presumably. And you just see the difference. It doesn't look like a lot on log scale, but just look at the numbers. 2.7 versus 4.6 million both time. We go further out. We're now 100 million apart. But you might be saying, oh, well, that's, you know, it's too hard to predict the future or whatever. Well, let's look at what the power trend does. Power trend is 1. It's the same number we know. Gosh darn it. It's 113 on the 8th of the 9th, whatever it is. All right, let's look at the whole thing. And then let's put the 2016 power trend on and project out the rest. This is incredible. All right. Very, very close to where we're only 6,000 off. All right, so this takes us back to, to this chart right there. I'm running it here. No, I'm running it here. When the Bitcoin price was under $1,000, that's when I'm running this power trend. In this chart. And then if we go further out into the future, it's still really good. So we can go out to, say, 2030. Let's go to the end 2030. My all-time power trend is number 2. That's the good one. That's like all the data. So there's your 550. It's December 10th, but you know, you get it. There's your 560. But you only take, you know, 2016 data projected until that day, 600. You're only 40K off. And you go in the future, like, yeah, you're going to get off by a few 100,000, but you're way closer than the stock to flow method, where you can be hundreds of millions off. You have to be able to run the numbers to explain the difference. This is also why Bitcoin is not exponential. I hear Plan B all the time saying Bitcoin is exponential. Bitcoin is not exponential. Bitcoin's been off the exponential trend. Look, this is just a shoehorned exponential trend. It's a straight line on log scale. We've been off that trend since spring 2022. And what does the exponential trend of Bitcoin price today predict? 600K. Bitcoin is not an exponentially growing asset. Nvidia, by the way, is an exponentially growing asset. And by the way, I had a good chat with Fernando from the Bitcoin Libertarian pod. You can check that out. It's on my Twitter feed as well. Over the weekend, he said that Facebook does run a decent power trend on its market cap or on its price. I want to run that as well because I'm curious to see both Facebook power curve versus Facebook's exponential curve, and we'll see how they work. It makes sense if the largest social network in the world, even if it's like terrible and centralized, might go on a power curve in the market, but it's still a financial asset. And I asked him during the show which one is stronger. Is it which one has a better R squared, the power trend on the price or the exponential trend on the price? And I don't think he remembered, but I'll run him as well. So that's a good observation, something to check out. But Bitcoin is not. Bitcoin is clearly not running on an exponential trend on the price. It's just not. You just got to run the numbers to see. Kind of looks interesting here, like, okay, it acts as resistance here, but then it went through. But this isn't, again, when you talk about support and resistance and all that, you can find 1,000 reasons that something did that. Like, just run the math and see which one looks better. Do the eye test. It's clearly it's running on a power curve. Well, it depends on your time. So let's look back here. Let's go on the 10th, 90th. Obviously, again, this comes back to timing, but let's even take here. So if you did it the right way, well, it just would depend. I don't even know what the right way is, but let's say you do it kind of like a trailing stop, right? So this is a good question, by the way. You don't sell on the way up because no one wants to forego potential gains, right? So let's say we assume it's definitely going to blow past the 90th. So it blows past. But then we kind of use it as a trailing stop indicator. So whenever it comes back down and hits it, we sell. So if we did that, well, first of all, you see the 10th wouldn't hit, but we did it be like here. So the value is 8,000, 8,250. And then the 10th is too low as a buy indicator, but you'd have to do the 20th. So 8, let's say it was, I don't know, again, it's really volatile. It's hard to catch that. You got that dead cat bounce here. I remember this dead cat bounce in February. But let's say you sell around 8,000. Your buyback is 3,000. Okay. Let's do it in 2022. Again, make it act like a trailing stop, the number 9. So you let it go. Let's presume you even don't sell right there because it's very hard to do this. But let's say you sell at the second like major drop, which is here. Okay, so your trailing stop would be $46,000 Bitcoin. Then the first time you start buying would be on the 20th. Again, because you don't know it's necessarily going to puke here. But let's say you start buying here. 18,000. So you sell at 46, start buying at 18. But again, I hasten to say this is like minimal amount of, again, not financial advice, but minimal amount of your stack if you want to try to do that, because it's super hard to sell Bitcoin. But that's a good way to look at it. You can look at the 90th percentile kind of like a trailing stop. And the 20th percentile is a buy signal. So we're just cruising right now. There's nothing, to me, there's nothing to do. I'm going to go back to the compound growth curve. What Tim mentioned. Where's our CAGR? Okay. So here's the compound growth over time. So compound growth moves in the opposite of the power curve, right? So the power curve moves up, compound growth moves down because that's just how it works. If it was exponential, both of these would be a straight line. Exponential would be kind of like a straight slant on the value, and it would just be a straight line across the page on percentage. Oops, it's a piece of my chair. Just came off. It would just be a straight line percentage across the page. So this chart updates every day, by the way. So, we come here. I got September 8th data, the Bitcoin price, 111,900, right, in the model. So first of all, you can see how volatile it can be, right? If you bought the top in November 2013, you'd have a pretty low CAGR held till today, although still really good, 47%, right? Versus if you bought at the bottom of the crypto winter, you'd have a 66% return on those coins all the way. That's per year. That's what you're getting all the way until today, until today's value. Okay? But let's take off this because it's very, noisy. Let's just assume the curve on a curve. So if you're Roger Ver coming in at $1, which is what he did, right? Early 2011. And let's just say he bought on the curve around $1 a coin. This is actually, the curve is higher. Let's say here. He's getting 122% still on those dollar purchases, or anybody who was buying for $1 back then. Right now we're at 41.5% CAGR. That's literally that representation of a $100 increase in the power curve each time. And then if we hold, like Tim says, until the end of 2030, there it is. In fact, he was exactly right on the calculation, 35%. Yeah, you wrote 37%, Tim. Doesn't matter. On the curve, it's close to 37%. So this is saying if you bought today at $113,000 Bitcoin, held until 2030, which we project 550, is a 35% CAGR. Now notice the price keeps going up, but if we hold, another 5 years after that, you fall. Your CAGR falls, which is kind of weird, to be honest, right? This is what the hard thing about power curves. This is why I keep saying the calculation of interest is very difficult in an all Bitcoin world. Because it's very hard for people to understand, okay, if I hold for 5 years, I'll get a 35% CAGR, but then I keep holding and I get a lower. People like to think in those constant exponential CAGRs. So, but it's still enormous regardless, even if you have this declining CAGR. Good morning, Slonic. Good morning, Midwest Picker. I still haven't gotten to your Monte Carlo, man. I'm sorry. We gotta talk about that again. Too many charts. Giovanni, I saw, was doing some Monte Carlo stuff. I presume you saw that? But this is a cool chart because think about it. Like, if you bought in even at the actual, even if you bought the top of 2017, all right, when it was December 19, it was 20,000. It hit over 20,000 this day. Okay, so 19,640, December 16th, 2017. See that green with the black B, actual CAGR until today. With today's value, 8 years later, that's a 25% CAGR. But if you had the ability to buy on the black line, which admittedly doesn't happen too often, but now I'm just talking about the power trend. If you had the ability to buy on the power trend, right there, or there, or there, or there, or there, then your CAGR would be would be smoother and it would be here and, you know, probably better. So 56% here, 61% here, 50%, 47%. And now everybody's got a chance to buy on the trend line because it's been on trend for, you know, nearly 2 years now. Really incredible. Everybody's got a chance to get this 42% CAGR. Yeah, you're right. You're right. It's just it's a lot of numbers. I can pull up Giovanni's. I think he's done some good Monte Carlos. So this is basically the power trend. He's got the Monte Carlo. Again, I don't know all the ins and outs of Monte Carlo, but I would say at this stage in time, I would say this is like kind of not actually as helpful because, well, I don't know. I don't know the inputs, but this presumes equal. You can clearly see this is equal probability up or down from here, which is like, it makes sense, whatever. But most people know that we're in a bull right now. Like I presume that we're still in an uptrend. So that's like right there, kind of it's very basic. Again, maybe it's a caveman assumption, but this presumes, and again, I don't know the deltas or the standard deviations, but these really very bright green, they look very equal. And you can see like by the end of, where's the end of the year? Okay, so the end of the year is already here. So the top of this bright green, 140, 150, the bottom back down to 90 or something. I don't know. It seems skewed equally, where I would say everybody sort of knows we're in an uptrend. So I would skew it higher. $560K, Matai, hello, is what we got in 2030. $560K. Year end. 550, 560. Sorry, was that something I just said? Lagging and leading indicators? What do you mean by this, Logie? The way he used it's a bit different. Might not make as much sense since the model is already a whopping 96. Yeah, he did a couple. This one as well. This one's harder to see without dates. Oh, actually, yeah, I remember reading this. I still have an issue sort of with this because or maybe he would agree with what I'm saying. Again, I'm just quickly looking at the chart, and I don't know his simulation, but this goes back to the beginning. This is the full price data, right? We can see this is 2010 data. This is a power law running through it. log. Again, I don't know the parameters of a Monte Carlo, but to suggest that even like the green, which is presumably a pretty decent standard deviation, would be like way up here at this time and way down here at this time, to me is like, I mean, I see his conclusion. This demonstrates that the power law is a deep statistical property of Bitcoin and not a mere regression fit. If he means the power law is much better statistical predictor, I would absolutely agree with that. I think that's a good conclusion, because it never got down to like these levels in this green or even up to these levels. And the red is just out of the question. I presume we agree on the conclusion here. But he says the green shades are the most probable paths. I don't know. I have questions. I have questions about his Monte Carlo, and right. So the skew would adapt over time. You have to work with that. I'll see Giovanni actually in October, so I'll ask him more about this. But as he says here, I would agree with this statement. Like, the power law is so strong of a predictor of what Bitcoin does. And I presume he's saying Monte Carlo is maybe less of a predictor. And what do you think, Slanik? Because if you look at this, like, it's never even come close to these levels. Like this price in 2017 or this price now. These are just, and even the green. So I don't know exactly what we're supposed to conclude other than the power law looks great, better than Monte Carlo. Yes, it will. Yeah, I'll ask him. I'll ask him when I see him. Everything depends on your assumptions, right? Your inputs. Again, and this is a good example, at least I'm a very basic applied statistics guy. Like, there's just one input in this chart, which is incredible, and it's time. The time versus price. Price is the dependent variable. Time is the independent variable. We know for sure time will increase. When you just run that, you get this line. It's like, it's an awesome line. And then from there, you can just run the math. So having said that, I hasten to repeat what I said before. And it's why I really think that this is a very good predictor of where Bitcoin price will be in 2, 3, 4, 5 years, in this range. Which you think about it, is a pretty tight range. Right? Let's go back out to 2030. And notice how I'm taking the 20th, by the way, and not the 10th. The 10th is actually not even as good. See, again, the way they stack up, the way these multiples stack up, 20th is better as far as, hitting the lows from 2017. Okay, so if we go to 2030 again, $560 on the trend, 90th 1.1 million, 20th. The 20th percentile is 248. 0.4 the trend. 250K. Like, that's 2.5x today's price. If someone wants to run a quick CAGR on that, I'd be curious. I can't do it in my head and too lazy to pull out Excel, but basically 5 years from now, what's the CAGR if we invest 100K and then pull out 250K 5 years from now? Should be, I mean, doubling in 10 years would be 7.2%. So we're well over that. We're doubling every 5 years and more. You understand what I'm saying? So this should be at least, what I'm saying is, if you invest today at 100K Bitcoin, and then we assume this 20K is the lowest it will go by 2030, you run the CAGR on that, you should be at like 15, 16, 17%. Again, it destroys anything. Yep, Tim's got it. Thank you, Tim. There you go. Doesn't this make you guys feel better? I feel better. I feel better. I feel better crunching these numbers. You buy Bitcoin at today's price, you assume it's only going to be worth the 20th percentile price of 250K. That's still a 17.4% CAGR per year. Crazy good. That's a good analysis, isn't it? I should think about that more, making a further chart of that. That's really good. Like, you're not going to find that return anywhere else so reliably, let's say. Tim, did you run 110K or 100 and what was your starting? 110K or 100K? Yep, got it. That's perfect. So price today, exit at 250 in 2030. That's how you calculate your CAGRs. 17.5%. Who are you speaking to? Good luck trying to sell in 2030. Is that your Bitcoin? Tim is a hardcore hodler. I like it. We need varying opinions on this channel, right? I need to get the market cap of all stocks. By the way, I have it. I'm going to tell you. This is part of my chart I'm going to show you tomorrow. Hold on. Which I wanted to do today. Who are you speaking to, Tim? Good luck trying to sell in 2030. You're talking about S&P 500 investors or Bitcoin investors? Let me find So thanks to the World Federation of Exchanges, they do have pretty decent monthly stock exchange data globally. And by my count, if I did this correctly, global equity markets, which I think, I have to double check, I think this includes derivative open interest. is 142 trillion today. I don't have a chart for this. I'll get it out tomorrow. But global equity markets are 142 trillion. And what I want to show is the trend line. That's going to be moving in exponential when Bitcoin will hit that, because that's a good store of value. I'm looking at this trying to ensure that this is correct, but I think it is. 142 trillion. That's higher than I thought it was. I thought we were like at 80 or something, but the New York Stock Exchange is 30 trillion. The Shenzhen Stock Exchange is 2 trillion. This is dollar market cap. Total equity market capitalization. NASDAQ Nordic is 50 billion. Very exciting. Nordic and Baltics. NASDAQ Nordic and Baltic total stock exchange capitalization is $50 billion. Ah, yes, right. Exactly. This is exactly the way to put it. Exactly. Because I've run this too, and I can show you, just so everybody else can see what Tim and I are talking about. Give me a second. So here's S&P. Remember I showed this in this is our Jeffrey West scale. We, going back to the 1800s, S&P was only doing 2%. From the Fed, it was doing 4.8%. From end of the gold standard, it was doing 9.6%. And now, even though it felt like a way lower base, right, because we lost 50% of the value in start of 2008, now it's doing 11.5%. So there's that number that Tim was talking about. And this is without dividends, by the way. You can simply add about 2% if you take your dividends and buy back more stock every month, quarter. I'm not doing it because it gets annoying, frankly, and it's like a little bit complicated. But assume you get 2% extra in this CAGR, so maybe you get up to 13. Is the point on that 11.5%? Maybe you get to 13. But anyway, we take this, and I know indices don't make any sense, but we look at the value. So that the trend, we're well over trend today, right? 646.0 is the S&P. The trend is about 6,000. If we take it to, so I'm still on the same trend line, right? 11.5% CAGR. But if we take it to end of 2030, just like Bitcoin, that's not even a doubling. Think about that. Think of it that way. All right. As it projects at the same CAGR that we've been running hot on since 2008, 10.660. That's like a 40% increase, right? That's not even a double. Compared with, which model should I use here? Compared with this. This is a good way to look at it, guys. Thank you for pushing me. Even if you get bear case Bitcoin, which is what, 240, right? That's 2.5x, roughly 2.4x, whatever, higher than if you could buy it today, Bitcoin. So we remain in a just insanely bullish position from where Bitcoin is at these sort of arbitrary dates. But I spilled the beans a little bit on what I want to show you guys tomorrow. It's going to be good. Basically, I want to track equity markets, and a little bit more. Yeah, 30.8 trillion is what the New York Stock Exchange does. The value of the New York Stock Exchange in June of this year. And that includes NASDAQ, by the way, I'm pretty sure, because I don't see NASDAQ separately. Oh, no, it doesn't. Sorry. NASDAQ, wow, that's a lot less. NASDAQ is 3 trillion. Wait, what am I looking at there? No, that's wrong. Sorry. That's the wrong. Hold on. I got to filter out. Just to make sure. Okay, I was right on my 30.8 for the New York. Where is NASDAQ value for June? There it is. NASDAQ market cap is $31.9 trillion. So you add those two together, New York and NASDAQ, that's 62 trillion. I summed it up wrong before. I told you 143. It's 127. 127 trillion. Global stock market. New York plus NASDAQ is 63 trillion in value, according to the World Federation of Exchanges. There is a Palestine exchange. Taiwan Stock Exchange, 2.4 trillion. Shanghai, 7.6 trillion. Sorry if I'm boring you guys. I'm just reading things. I'll get this charted tomorrow. I agree completely. I think that's where we're going, is more and more people are going to be switching from other assets to Bitcoin. Okay. I might have to end it there today, guys. But if we have established anything today, it's bear case for Bitcoin looks great by 2030. This is a really good thing, actually, to keep in mind. 250K. Bear. Like, that's if we're in the midst of usually the deepest that we go during bears. 250K. 5 years from now. If we're in the midst of a bull, just time our 4 years. We probably won't be, but if we are, 1.1 million. Base case, power trend, 560K. And in my humble opinion, these are extremely, extremely strong ranges. Like very, very strong. And makes a little bit more sense than this. This is interesting to show how, I think his conclusion is how good the power trend is based on Monte Carlo. But yeah, these are like way out there, all these prices. So I don't see them as likely at all, frankly. Hard to switch from Bitcoin to another asset. Thank you, Tim. It's down here. My BTC Pay if you guys want to drop a few sats, value for value. No real ads running here. No subscription fees. You guys help me with my sanity as well, trying to parse through this stuff. But I'm not worried. We're on trend. Maybe we drop back down to 70, 80K. Like we dropped down to 50K here, but it's just, I'm not worried really about the trajectory of Bitcoin right now. And if anything, we're going higher, not lower, over the next 3 to 5 months. All right, guys, I'm signing off. Thank you. Have a good week. Talk to you tomorrow.